All right, what managed to rally in spite of today's overall ugly tape? How about Signet Jewelers, the parent of K Jewelers, Zales, and Jared? This morning, Signet reported a healthy revenue beat and an enormous earnings beat. Management raising their full-year forecast. We like this. Now, you know, I've been keeping track of this one for a long time, often speaking with former CEO Gina Drosos about, she stepped down in November. We haven't had a chance really to spend a lot of time with the successor. So this is our chance. Let's take a closer look with J.K. Symancyk. He's the new CEO of Signet. I hope you don't mind calling you new. I know that's probably a bit of a misleading thing.
No, I'll take it. That's
okay,
great.
But Mr. Symancyk, J.K., great that you're here. We have a lot to talk about. I mean, with gold hitting all high, all new, I thought that would be the discussion. But you have a Taylor Swift impact that is probably the easiest way for those of you out there to say, I want a Taylor Swift idea. Give it to us.
You know, we're excited. I mean, Taylor and Travis, their moment to celebrate love really, I think, galvanizes that conversation for so many Americans right now. And we're excited to be a part of it because it's right on par with our purpose. And, you know, ever the merchants, we've got a lot of merchandise that really echoes or embodies the spirit of the ring she's got.
Okay, so let's use this metaphor to go into your different brands, because it's really important for people to understand what's Jared different from K's. And I figured that maybe you can show us exactly whether, let's say I want a really expensive ring to impress my fiance.
Well, so great question. And I would take you right to Jared, which really is our brand that embodies inspired luxury.
Okay.
The great thing about Jared is not only do you have finished merchandise, but you also got craftsmen on site. So the ability to do custom real time is something that separates us as a large brand. And there's no better example of it than this ring right here. That is a ring that we've turned around custom in 6 days. It is a replica or inspired by, if you will, of Taylor's ring. Now that's also a $100,000 price point item with natural diamonds.
Other than Travis, who can afford that?
Well, I can promise you her price point's a little higher than that.
Okay. Well, I can promise you I'm not drafting until the 8th round. Now, but there's also, it's themed all here, right? More than just that.
Yeah, I think, you know, obviously this is a bridal story, which is going to really resonate more to Jared and to Kay as our milestone gifting. Zales positioned a little bit more for self-purchase and fashion. So we're moving more of that brand into a space that's targeted on her shopping for herself. There's still a bridal component to it, but going to be a little bit lower price point, a little bit more fashion inspired.
Okay, so we do need to point out the difference between milestone, wedding, and holiday season, but this makes it so that anyone who just thinks, wait a second, it's just a holiday gift, or Valentine's Day, actually right around the corner. This is every week somebody.
Absolutely. I think with a brand like Kay, you're really talking about a brand that reaches the broadest cross-section of America, the largest jeweler in America, and we're there for every gift-giving occasion. So certainly engagement is a big part of that, but gifts for him, gifts for her, gifts for the holiday, any of those significant milestone moments, that's really the bread and butter of a brand like Kay.
Okay, so Laboratory, your predecessor came on. We were worried about Laboratory because whether they held value or not, and we're worried about gold in the impact of how it's too expensive and what those mean for the consumer and therefore for your stores.
Well, let's talk about diamonds first. Mm-hmm. And I say diamonds because we do make the distinction between a natural diamond and a lab-grown diamond, but we talk about them as a category because there is a market and a demand for both. And we see that. When you get above $5,000 price point, that's a more natural-leaning customer. That's somebody that's thinking about holding value as an asset. When you get, particularly in engagement rings below $2,000, that's about maximum emotional value, and that's where Lab really has played.
Okay.
Maybe even more importantly for the future of lab-grown diamonds are a category extender for fashion, which is critical to our growth strategy. It really does make diamond fashion jewelry more affordable in a broader cross-section of jewelry and really makes it accessible for people every day.
Now, gold has gotten so expensive, but I'm not sure how that cuts. I mean, anyone who bought a ring in the last 10 years must be feeling that they made a great investment.
You know, I think gold, I mean, you know, who'd have thought that we'd be at these levels, right? But the nice thing about gold is customers know the value, there's a definable market, and they're willing to make that investment. That's probably the most permeable category as it relates to transferring price because people can anchor against it. I think we do feel it a little on the low end in a business like Banter where you've got more $100 and below price points. So that's a little more disposable income exposed. But in the fine jewelry business, which is really the bulk of our volume, we find that it tends to find its level and consumers are willing to pay for it.
Okay, now physical stores, I love the comeback. We've got some terrific same store. Online, you need a little work.
Well, our online business is strong when you look at those core brands. So Kay, Zales, Jared, we continue to drive growth, and we feel good about the progress there. Our pure play digital brands, a little bit of a mixed bag. Blue Nile, we're seeing healthy progress. Seeing growth within the business and really do feel that we're on the right track. We've got some work to do with James Allen. Admittedly, I think we've gotten a little bit out of sorts around customer strategy, and we've taken some time to reset both the pricing and promo as well as our assortment architecture so that we're positioned well for the back half of the year.
Your Blue Nile brick and mortar at Short Hills Mall is gorgeous.
It is. It's a beautiful experience.
It's just really one of the better experiences for jewelry.
Blue Nile really is a nice experience in a number of locations. That's a great example.
In the meantime, you're continuing the tradition, something I like, which is this buyback of 59 million shares in 2017. You're down to about 40. For people who feel that what is the benefit of being a shareholder of Signet? You make it worthwhile.
Well, we're focused on what we can do to drive shareholder value, and given the discount that we've seen in that stock price, I think it's a great way to return capital to shareholders. We're trying to balance that against our long-term growth strategy, and we really do feel like in the long run, investing in driving comp sales growth, as you saw in this quarter, the slightest movement up in comp sales growth, and we get good leverage on SG&A, we're able to pull that through to operating margins.
No, so you sure do.
Striking that balance is important for us.
It's a shame. I mean, you put it on a tough day. I think the stock could have really been up 20 points. That's how meaningful this quarter was. So congratulations to you.
Thank you. I appreciate it.
Okay, that's J.K. Symancyk. He's the CEO of Signet Jewelers, SIG. And by the way, it's good to see you. No, it doesn't work like that. They have money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.